Hi CA students, let's revise CA Final AFM Chapter 13 Business Valuation. Practical question 6. The valuation of Answer Limited has been done by a investment analyst based on an expected free cash flow of 54 lakhs for the following year and an expected growth rate of 9%. The analyst has estimated the value of Answer Limited to be 1800 lakhs. However, he committed a mistake of using the book values of debt and equity. Okay. The book value weights employed by the analyst are not known, but you know that the Answer Limited has a cost of equity of 20% and post-tax cost of debt of 10%. The value of equity is thrice its book value, whereas the market value of its debt is 9 9/10 of its book value. What is the correct value of Answer Limited? So this is a reverse calculation type of question, wherein we know the value of Hansel Limited as 1800, but the analyst has calculated using book values. So we will be first but we don't know the weight of the book values also. So once we know the weight of book values, then only we can calculate the actual value, because they've given the value of equities thrice its book value and market value of debt is 9/10 of its book value. So anyway we need the book value of equity and debt, then only we can calculate the weights. Then multiplying with this cost of equity and cost of debt will give us the total cost of capital of the firm, adjusting to the market values. Then we can easily calculate by the free cash flow, because we know the free cash flow here. Okay, first reverse calculating. So value of the firm is equal to free cash flow divided by cost of capital minus growth rate. Here the cost of capital is overall cost of capital, because value of firm we are calculating, and the analyst is calculated as 1800. So using his value only, if we reverse work, 1800 equal to 54 lakhs divided by KE minus G, whereas KE we know that it is growth we know as 9%. Hence we can get the KE or KO actually in this case, because it is the overall cost of capital. So KO is 12%, which by reverse calculating we got. Now uh, then we know that the cost of equity and cost of debt also. So KO is equal to KE E by E plus D, the equity weight, plus KD, which is post tax cost of debt, multiplied by D by E plus D, which is nothing but the debt weight. Debt's weight. Now we don't know this weights, but we don't know all the rates. Like overall cost of capital is 12%, KE is 20%, and cost of debt, which is post tax cost of debt, is 10%. This weights will be okay. So if we find out one weight, then we can easily find out the other weight, because the total is equity plus debt only. There is no information. Yeah, the book values of debt and equity only they've given. So only debt and equity is there. Okay. So if let's say debt equity is X, then debt will be 1 minus X, obviously, correct? This is for weights I am telling. So using this approach, if we reverse calculate, we'll get the weight of either one of these things, either equity or debt. In this case, they have considered the weight of debt as X. So they found the value as 0.8, which is nothing but 80%. But we first found the overall cost of capital using the analyst value. So whatever the weights we got is nothing but the book value weights. Okay, now we got the book value weights as for debt it is 80%, hence equity will be obviously balanced 20%, which is nothing but 1 minus X. So 1 minus 0.8 will give us 0.2, which is nothing but the weight of equity. Okay, now we know both weight of debt equity and weight of debt also in case of book terms. they have given one hint that the value of equity is thrice its book value. So 0. 0.2 multiplied by 3 will be 0.6, nothing but the market value weight of equity. And the same case, market value of debt is 9/10 of its book value, which is nothing but 0.8 multiplied by 9 divided by 10, so 72 percentage. So we got the correct weight of, so market value weights. So using this weights, if we got the overall cost of capital, then 20 multiplied by 60 divided by 132. 132 is nothing but 60 plus 72 plus 10 percentage multiplied by 72 divided by 132 gave us the overall cost of capital of 14.5455. The 12 percentage which we got is based on the book value weights. This 14.5455 is based on the market value weights. And the correct value of firm also we can find out. We know that the free cash flow is 54 lakhs, so 54 divided by KO minus G, so KO is 14.5455 minus the growth rate, we know that it is 9%. So it will give us the value of the firm, which is 974.73 in our case. Thank you.